Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Mark Marex, Senior Director of Index Research at Nasdaq, Paul Schroeder, Director of Factor and QQQ Equity Product Strategy at Invesco, as well as Kirsten Wegner, CEO of the Index Industry Association. We're here to discuss the role of indexes in the financial ecosystem and product landscape and how it allows for investor choice and innovation. It is great to have everyone on the desk. Welcome to Trade Talks. Kirsten, let's talk about that, the role of indexes within the financial ecosystem. As an investor, perhaps you're not aware of what happens behind the scenes and with product development and so forth.
Absolutely. Well, I think as investors, we want to have reliable instruments to measure the markets, and really indexes evolved from just even the start of the railroads. They've been around for hundreds of years or 100 years, and people need to quantify a market. They want a statistical construct to kind of tell them, is the market going up or down? And just like when those railroads evolved and they needed a metric for that, now we see whether it's AI, energy, robotics, there's so many different themes for investors, and those indexes are the statistical constructs, which are of course separate from the ETF wrapper.
Yeah, and Mark, let's talk about the Nasdaq 100, of course, Nasdaq's flagship index. It's one of the most widely followed indexes. Give us some information behind that, why it's the benchmark of innovation.
Yeah, sure, Jill. I mean, look, we celebrated the 40th anniversary of the Nasdaq 100 earlier this year, right? So not exactly a lightweight when it comes to live index history at this point. It's been around for my entire life. I think what's unique about this index is, you know, it didn't start necessarily as what you would think of as a typical equity index benchmark, right? And when you think about what a benchmark is, it's sort of trying to measure something that is pretty broad, right, and pretty encompassing of either an entire market or a big slice of the market. It was a pretty niche index for the first, call it 15, 20 years of its life. And then sort of in the last 20 years, right, it's really grown up to be, I would say, not just the benchmark of the 21st century for all the reasons that we talk about in terms of leading in innovation. And when we say that, we mean things like R&D spending, patent filings, you know, giving you the thematic exposures to things like AI and robotics that investors seek out, but really being a massive chunk of the market exposure in its own right now, right? It's about 50% of total U.S. equity market cap these days, and so I think has really grown into, you know, not just this innovation benchmark, but also a true equity core type of benchmark for a lot of investors.
Yeah, and of course, Paul, investors can get exposure to the index via the Invesco QQQs.
They definitely can. So I find it very interesting where we have an expert on indexes and at both NASDAQ and IIA, but indexing and investing in indexes have become such a core part of everyone's way of constructing a portfolio. And QQQ, I think, is a primary example of making that tangible and democratizing that for every investor. You know, QQQ gives you access to the NASDAQ 100, the 100 largest non-financial companies. It has been around for over 26 years and really has been a primary growth engine for a lot of people and institutions' portfolios through the years.
Yeah, and Kirsten, this is why the enhanced transparency and independence of the indexes is so critical for portfolio managers in order to be able to bench their performance.
Absolutely. I think investors want that transparency, they want that independence, and so we know that because the indexes are separate from the investment vehicles, that there is that independence, that there's not that kind of intermingling. So it's just so great also to see that democratization of investing and cost savings as well.
Yeah, and it also lends to the expansion of investment choices and innovation within the space.
Absolutely, there's so many different choices for investors right now. There's really something for everyone. You know, we have other people here in the ETF wrapper space, but whether it's, you know, private markets, we see trends with that there are now private market indexes, digital asset indexes. So there are just so many different innovations and new choices for investors that it's not just plain vanilla indexes anymore.
Yeah, Mark, let's talk about that use cases and the overview of the tracking product landscape as it relates to the Nasdaq 100.
Yeah, so I mean, look, what we've seen, especially I would say over the last 5 to 10 years, is the emergence of this true Nasdaq 100 ecosystem that I think is unrivaled globally outside of sort of the S&P 500, which has been the dominant index ecosystem when you look at just not just AUM that's tied to it, but just the plethora of different product wrappers and strategies that are overlaid on top of the S&P 500, whether it's, you know, options overlays, whether it's, you know, annuity type of indexes, whether it's factor, whether it's, you know, different market cap spectrums within the S&P 500. We've seen all of that get broadly adopted with the Nasdaq 100 in recent years with the emergence of the options overlay suite, with a lot of proliferation of vol control indexes, for example, for the fixed index annuity space, things like RILAs, a lot of activity in sort of the broader QIS structured note area as well. Not to mention, you know, ETPs, right, which is the bread and butter of our business, which is over $500 billion in total AUM, most of that being from the Qs, but a lot of other AUM coming in recent years from things like, you know, the mega cap segment of the Nasdaq 100 exposure itself, or, you know, a low volatility overlay or something of that nature. We've really seen that ecosystem develop, and it continues to expand year after year.
Yeah, and you're also seeing a broadening out of the types of companies that are represented within the index as well.
You definitely are. I think there's a common misnomer that we run into, that Mark and I run into, where the Nasdaq 100 is just a tech index, right? Where we do have a lot of the major players within the most recent theme now, which is AI. But if you look back over the past 26 years that QQQ has been around, we've had exposure to companies that have been at the center or adjacent to all the major technologies that really make our day-to-day lives what they are today. So the different type of exposures that we do see within QQQ, whether it's technology, consumer discretionary, healthcare, what you're seeing are actually companies that are innovation focused and technologically focused, that is really needed to be a primary player regardless of what industry you're in today.
Yeah, and you know, to your point, the Qs have been around for, you know, decades. I understand that there's a special meeting of QQQ shareholders that's scheduled for December 5th, just a few weeks away, to vote on a proposed proxy. What does that mean for shareholders of QQQ? Should they vote? Is that going to impact you know, the performance or how it fits within their portfolios?
Yeah, great question. I'm glad you asked. So that meeting is coming up in the first week of December, and it's something that I think is very fitting for QQQ to be doing. It's structured currently as a UIT, like many ETFs were that were launched in the 90s, and we're proposing to change the structure of it to a standard ETF, like any ETF is launched today, to a 1940 Act open-end fund. And what does that fundamentally mean? It means really three different things. First, the cost, the expense ratio is going to be dropped from 20 basis points down to 18 basis points. Secondly, there's going to be greater transparency with the fund, where there will be semi-annual reports, a summary prospectus, and also greater board oversight on it. And then thirdly, I think, which is most important, probably one of the more common questions we get, is that it's not going to create any tax consequences, because it's just changing the structure. There aren't going to be any buys or sells related to the shift from structures. So at the end of the day, we feel that it aligns with investors' long-term goals of lowering the expense ratio and, you know, really living up to the themes of that you see within ETFs today.
What about emerging global industry trends that you're seeing within the index space?
So we're seeing an appetite for indexes in the APAC region, in the Middle East. I think globally there is a sense that people want to shift from this savings to investing mindset. And what I mean by that is there's trillions of dollars sitting idle in cash accounts globally. So you're seeing governments taking up initiatives to try to encourage more investing and people to convert that cash into investing. And investment vehicles tied to indexes are a perfect example of kind of a product that people can dip their toes into that ecosystem and have these diversified products. So I think there is this interest globally to adopt investment vehicles tied to indexes.
Are you seeing emerging markets starting to gain traction within thematic investments?
So absolutely. I think there's a real curiosity in the APAC region about different innovation-themed indexes. And we're also seeing indexes, you know, geofenced to those regions, right? If you want to invest in firms in a specific region, you know, people are, the index firms are partnering with some of the local governments or trade associations and kind of well, rather companies to try to create indexes specific to a location.
Yeah.
So it is a really exciting time, whether it's in India or APAC or the Middle East for index spreading.
Yeah, Mark, it sounds familiar to the work that your team is doing as well, within the different regions.
Yeah, I mean, I just want to say a couple things, right? I mean, part of, I think, this trend that is spreading globally is on the back of the massive success of ETFs in the US over the last 3 decades or so, right? And disproportionately so index tracking ETFs, right? Passively managed ETFs, where we're now on pace to easily exceed $1 trillion of inflows into ETFs globally, right? And the US has been the leader of that. You heard Paul talk about they're dropping their expense ratio for the Qs. I mean, this is a constant year after year trend that we've seen of some of the biggest products out there looking at different ways to lower fees, lower costs for the end investor in a backdrop where the cost of everything is going up, right? Inflation is everywhere all around us, and yet ETFs, because they are able to keep their cost structure down in large part by being passively managed, tracking systematic indexes, they're able to deliver these real savings for investors in the US, increasingly in other parts of the world, and we're seeing that at Nasdaq. I think recently, either last quarter or so far this year, about half of our launches have been for international tracking products of our indexes. That's the level of penetration we're seeing and the level of momentum with that growth expanding outside the US.
Yeah, well, it's a more efficient way to access the US markets within a wrapper that's professionally managed.
It definitely is, and I mean, Invesco has been a large part of the success seen within the U.S. Our ETF and index business passed $1 trillion in AUM globally back in October, and a large part of that is due to the success and partnership we have with Nasdaq. But I think another aspect of it is that individual investors have become more involved with the management of their portfolios, and the rise of thematic and specialized indexes as well have provided more ways to access specific parts of the market. So whether you're looking to access mid-cap growth through QQQJ or small-cap growth with a patent tilt through QQQS or an option overlay with QQA, a lot of these options are available to investors just by going on, placing a simple trade as they would a normal stock. That wasn't available 20 years ago.
Yeah, and of course, Kirsten, we can't escape mentioning emerging technologies such as AI in any conversation. So as it relates to the integration of technology into index construction, what are some themes, what are some of the benefits of it that you're seeing there?
Sure, I mean, I think absolutely companies are looking at that kind of evolving space. How can they make index products more efficient? I mean, as statistical constructs, where you're building out the index and you're also scrubbing data, there's so many steps, it's a very intricate process. It's not just clicking on a ChatGPT button to come up with a number for index. So that is a perfect area for AI to play a role, whether it's construction, rebalancing, modeling, and then of course you also see indexes that are tracking the AI companies themselves. So there is just such an exciting growth in that space, and I think that's something we'll keep an eye out in the future from the Index Industry Association standpoint.
Yeah, and perfect segue for you, Mark.
Yeah.
Let's talk about some of the growth in thematic indexes. I'm sure AI is one of the key drivers there.
Yeah, I mean, look, I think we have, if not the single biggest offering of thematic indexes, we're certainly one of the leaders in thematic equity indexing. In terms of AI, I believe we still have the single largest tracking product of any AI thematic index that's out there. That's in the XAIX UCITS ETF that we launched with DWSX trackers in Europe back about 7 years ago. That strategy doesn't just give you exposure to companies leading in AI innovation, it actually employs AI technology in the form of machine learning to read patent filings to try to discover which are the companies that are contributing most intensely to AI technological development. And so, we have access to a lot of that underlying data, and it's really fun to be able to unpack that, see what the machine learning algo is finding, and come up with insights for the Nasdaq 100, for example, and see this is an index that at the end of the day, about 2/3 of it is overlapping with an AI thematic and has a ton of companies producing those patents year after year, leading in the development there and giving you that innovation exposure that so many investors seek out these days.
Yeah, I'm sure you're talking about that theme daily with clients.
Excuse me, we definitely are. Especially with, it seems like you can't go a day without reading a headline about a new partnership, especially this time of year where we have earnings announcements. It's something that comes up on a daily basis. What I really enjoy now, where we are today in the industry, is that an investor can take a very specific targeted approach by investing in an ETF that tracks an AI index perhaps, or you can go with the Nasdaq 100, which gives you broader exposure and a little bit more diversification as well. So I think it's very exciting, and on a day-to-day basis, there definitely is something to pay attention, especially within the AI industry.
And it's interesting that you brought up the diversification, because we understand what companies have exposure directly to AI. A number of the Mag 7 companies as an example, but with the broadening out and diversification, I would imagine over the next couple quarters, year or two, we're going to be discussing where the ROI on AI adjacent companies or how it's being employed and what that means for future returns and so forth. I think that we're going to start to get close there.
We definitely are. I've started to read more just over the past week about the ROI on the spend that these companies have on data centers, et cetera, and how long it may take for that to get paid back. But I think in general, I think the natural expansion is, how are these data centers, how is that spend overall making these companies more efficient, and how is it adding to the top and ultimately the bottom line? And I think those questions are going to be raised more consistently over the next 12 months.
Yeah. Let's talk about the future outlook here as it relates to indexing. Is it a high barrier entry for new entrants to come in? How do you see it evolving?
So right now we have over 3 million indexes globally. So it's a really exciting space. There's not like a one-size-fits-all approach. And I think we're seeing a lot of new entrants to the markets in different regions. And we're also seeing larger legacy firms innovating in new ways. So we're seeing a lot of exciting developments on, again, digital asset indexes, on AI indexes, private indexes. So that's a really exciting space to be in. And so we're seeing a lot of growth.
Yeah, and Mark, to wrap up here, from Nasdaq's perspective in terms of the outlook of indexing.
Yeah, I mean, look, I think a lot of the interest that we've been hearing recently has been in that sort of more sophisticated, more quantitative investment strategy, delivering that to the everyday investor in something that's low cost and transparent, like an ETF wrapper. That used to be the domain of hedge funds with high fees, not a lot of transparency, long lockups, to get an options strategy tracking a broad equity benchmark that gives you capped upside, enhanced income and downside exposure, right? You can get that in an ETF today tracking the Nasdaq 100. So there's a lot of interest around doing that type of index development, and also looking at alternatives, crypto being the biggest one there. Obviously, there's been a lot of institutional attention and adoption this year with respect to crypto. We've got our own Nasdaq crypto index benchmark type of offering with a number of indexes in that space that we're trying to grow. And so whether it's crypto, whether it's other alternatives like private assets, figuring how to index that appropriately and in a compelling way, these are all things that we're paying attention to and constantly looking at.
All right, appreciate everyone's insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.